Let me welcome on board Abhay Bhutada, the MD at Poonawalla Fincorp, joining in the show right now. Abhay, hi, morning. Good to have you in the show. You know, the one thing that struck the most was your highest ever quarterly disbursement figure, highest ever profit, lowest NPA and GNPAs. Before getting into details, what were the drivers for this kind of growth, especially at a time when some are saying that the environment is showing some slowdown in the lending space?
This is the efforts of last 2.5 years. Post-acquisition, we have clearly articulated our strategy, the segment, our chosen segment of pre-owned car, loan against property, personal loan, business loan, supply chain finance, machinery loan, medical equipment loan, consumer finance. So I think the segment which we are targeting is a very different kind of segment. It's a combination of fintech, bank and NBFC. It requires a lot of courage to target this segment being an NBFC. But because we are a CRISIL AAA, considering our less cost of fund, low operating cost being a digital model, and less credit cost, we don't give loan to new to credit, only bureau tested customer. So technology, system, process, there are multiple things are there which are helping us to achieve this growth. The opportunity is huge. First, we have identified what is the total addressable market. And post that, I think we have started targeting slowly. You see, last 8 quarters, there is a consistent performance in terms of disbursement as well as the AUM growth. And most important here, I want to highlight the base is very low. So it is easy to achieve this number. And we have given a guidance of 35 to 40. And considering the current base, I think in the future we'll stick to our guidance of 35 to 40%. The focus will be on to achieve the asset quality, maintaining superior profitability, at the same time maintain this 35 to 40% growth.
Okay, now Abhay, help us understand your outlook on future growth. And next few quarters, momentum is building up in all your spaces.
See, basically on a quarter-on-quarter basis, right now we are growing 8 to 9%. I think 7 to 8% quarter-on-quarter will continue to grow, and will, as I said, 6 to our guidance. That 35 to 40% will be our AUM guidance. See, in pre-owned car, business loan, lab, in terms of monthly disbursement, already we have taken major leadership. Pre-owned car, we have crossed 225 crore on a monthly basis. Loan against property, 350 crore on a monthly basis. Business loan, 250 crore. Out of 100 branches, even all 100 are not fully operational. So there is a huge opportunity available there. And over and above that, we have a consumer finance, personal loan, machine loan, medical equipment loan, so many diversification in terms of product range. So going further, you can expect 5 to 7%. We have incremental disbursement basis. We have taken market share at top 100 branches. Considering that, we are confident of achieving this growth.
All right, and let's also discuss your asset quality, because there is an assumption that the market is high growth and that leads to risk on your asset quality, but you have managed to maintain your asset quality. How has it improved and what is the outlook?
Yeah, very important here to note that it is very easy to go, but at the same time you need to easy to lend, but you need to collect the money also. So we are not into collection business. From day one, we are into risk business. So if you see the breakup of GNPA is 1.33, net NPA is 0.70. This is because of the legacy. Our new book GNPA is 0.42 and net NPA is 0.23. I think we don't expect credit cost guidance we have given between 0.8 to 1.2, and new book is performing well as compared with our expectation. Though somebody can say seasoning is not there, but if you see there is a bureau seasoning at a customer level, there is a business vintage, and we have done this in the past. So we are confident of maintaining net NPA below 1% as per our stated guidance of Management Vision 2025.
And given RBI's cautionary stance on unsecured loans, what is your own strategy going forward, especially when it comes to this segment?
See, if you see last quarter to this quarter, we have moved from 46 to 52% on the secured and 48% is unsecured. And we have taken major market share in pre-owned car, loan against property, secured products also. So considering that, we don't see any major impact. Our current leverage is 1.5, which is the lowest in the industry. Our cost of borrowing is also amongst the lowest in the industry. We are CRISIL AAA rated NBFC. Our capital adequacy is 38%. Considering that even if we grow at 35 to 40%, we don't require any additional capital for next 3-4 years. So there is no impact of the new guideline changes on either growth or on the cost of borrowing side.
So are you maintaining your guidance of ROA, and what is the outlook here?
See, ROA, we have given a long-term guidance of 4 to 4.5%, but we are constantly reducing our OPEX, that is adding to the profitability. If you see on a year-over-year basis, in absolute term also, there is a reduction in the OPEX. Right now, including ESOP charge, it is at 4%, without ESOP charge 3.5. So next year, we'll be able to reduce to 3.5 OPEX to AUM. So that is adding to the profitability, and there is a less acquisition cost, less credit cost, and overall because of the less OPEX, it is clearly adding to our ROAs. So right now it is at 5.3. We are achieving much more than what we have guided. But on a long-term steady and state basis, we'll be able to maintain anything between 4 to 4.5%.
Right. And lastly, how is it that you're progressing towards your vision of 2025, your long-term goals in terms of financial metrics, profits, AUM growth?
See, so as per the AUM and as per the profitability, overall secured unsecured mix, profitability guidance, AUM guidance, I think we have given a guidance of short term 20 to 25%, long term 75 to 80%, and we are able to manage that. All the parameter of GNPA, NNPA, AUM growth, and the return on assets, I think we are able to over deliver whatever we have given the guidance, and we are giving consistent performance over a period of, if you see, last 8 quarters in each of the parameter, we are over delivering on what we have guided, and we are confident of achieving the long-term metrics what we have stated, as well as management vision 2025. We have achieved most of the parameter. So now we will come out maybe 6 months down the line with new management vision 2030.
Really appreciate your time, Abhay. Thank you for joining us.